Welcome back to Weather Finance. We've talked about how to trade the metals and how to hold them. Now let's talk about the forces that actually make them move. Important disclaimer. This is for entertainment and education only. We are not financial advisors. Investing involves risks. Always consult a qualified professional before making decisions. Three main drivers push the price of precious metals: interest rates, the dollar's strength, and crucially for us, geopolitical and environmental risks. Driver 1. Interest rates. Gold and silver are non-yielding assets. They don't pay interest like a bank account or a bond. When the Federal Reserve raises interest rates, bonds and bank accounts look more attractive because they offer better returns. This typically draws money out of precious metals, causing their price to fall. Conversely, when the Fed cuts rates, the yield on cash drops, making non-yielding gold more appealing as a store of value. This causes the price to generally rise. Driver 2. The dollar's strength. Gold is priced globally in US dollars. This creates an inverse relationship. When the US dollar index XY is strong, it takes fewer dollars to buy an ounce of gold, putting downward pressure on the price. When the dollar is weak, it takes more dollars to buy that same ounce of gold, usually pushing the price upward. Always watch the DXY alongside the spot price. Driver 3. Geopolitical and environmental risk. This is where our focus on weather finance comes in. Gold is the ultimate fear trade. In times of war, political instability, or major financial uncertainty, investors flee traditional currencies and bonds and rush into gold as the universally recognized safe haven. This is why gold tends to spike during crises. Silver's unique weather risk. While gold is a fear trade, silver is also an industrial metal. Extreme or unpredictable weather events can drastically impact key industrial sectors. A major hurricane or flood can disrupt supply chains and mining operations, especially where silver is a key byproduct. This sudden reduction in supply can cause localized or short-term price spikes in silver. Furthermore, the long-term shift toward renewable energy requires massive amounts of silver for solar panels. Policy decisions around climate change, therefore, have a unique, multi-year bullish effect on silver demand. In summary, watch the Fed for rates, watch the DXY for global currency flow, and watch the headlines and the weather for crises that trigger the ultimate safe haven demand. We often link to charts and services for tracking the DXY and interest rate indicators. These are affiliate links, and we may earn a commission, but it costs you nothing extra. What driver do you think is most important right now? Let us know in the comments. Subscribe to Weather Finance for more analysis where Mark